What's up? Welcome to Blockchain Tech and Finance. If you're on the YouTube side, please do subscribe, turn on the bell notifications. I have all these article descriptions in the description box below that you can read through on your own due diligence. Check the monitors here. See that the audio playback's going. Otherwise, going to jump right on into the market data for the US market data. I have a slew of different articles. Cool. Relating from blockchain technology, cryptocurrency, NFTs, metaverse, and technology and finance in general. Before I close out the stream for the day, I try to do these every day, albeit holidays if you celebrate, and New Year's coming up. Therefore, otherwise, let's go right onto it. In the Dow Jones, we got Dow Jones Industrial Average up 0.43%. NASDAQ Composite up 0.54%. S&P 500 up 0.42%. Global Dow Real Time up 0.36%. Gold Continuous Futures is up 0.43%. And crude oil is up 2.24%. In the Europe market data, FTSE 100 is up 0.04%, DAX is up 0.11%, CSE 40 is down 0.03%, FTSE MIB index is up 0.26%, IBEX 35 is up 0.08%, and Stock 600 is up 0.14%. Swiss market index is up 0.18%. In the Asia market data, the Asia Dow up 0.1%, Nikkei 225 up 0.16%, Hang Seng down 1.69%, Shanghai Composite down 0.68%, S&P BSX Sensex up 0.32%, FTSE Straits down 0.01%, S&P ASX 200 benchmark down 0.03%, Kospi Index up 0.12%. In the currency market, with the euro up 0.23%, Japanese yen up 0.05%, British pound up 0.19%, Australian dollar up 0.25%, US dollar index down 0.22%, WSJ dollar index down 0.15%. In the cryptocurrency markets, we have Bitcoin down 2.82% at $42,267 per BTC. Ethereum down 2.24% at $2,220.59 per ETH at the time of reading. In the rates market, you have the US 10-year Treasury note up 0.003, Germany 10-year government bond, no flux, Italy, no flux, Spain, no flux, and UK 10-year gilt, no flux, no movements. We're down. Japan 10-year government bond up 0.017. In the futures market, again, we got crude oil up 2.2%, gold continuous contract up 0.42%, E-mini NASDAQ 100 index up 0.63%, E-mini Dow continuous contract up 0.43%, E-mini S&P 500 futures up 0.43%, and the silver continuous contract down 0.26%. All right, the first article I have to read here today from Coinpedia on blockchain specific news. I'll jump right on into it. So VC funding plummets in 2023 despite soaring crypto markets, and here's why. This is from Kadir AK, author and writer reporter for Coinpedia. In the highlights, startup investments dropped 68%, but overall crypto market value has doubled. Analysts see the drop as a healthy correction, refocusing resources and addressing investor concerns. AI in 2024 aims for grounded applications in healthcare, finance, and manufacturing. Hard tech and frugal entrepreneurship on the rise. In a year filled with financial uncertainties and regulatory changes, the crypto and blockchain industries face significant challenges. Specifically, funding for startups in these sectors dropped by 68%, amounting to $10.7 billion in 2023. Interestingly, while the overall value of the crypto market nearly doubled, venture capitalist VC investments struggled. Startups in early stages from pre-seed to Series A saw growth, but later stage startups encountered funding reductions. Sectors like NFT gaming, infrastructure, and Web3 flourished, yet areas like data trading and enterprise solutions saw less support. But why? So, much needed correction or a red flag. Analysts consider this substantial drop in funding as a healthy correction for the industry. It's seen as an opportunity to refocusing on critical priorities. Although 2023 ranks as third highest year in total investments, it underscores the impact of regulatory uncertainties and recent failures in the crypto market on investor confidence. As we look forward to 2024, the expectations for a recovery are being pushed to 2025. Around 2,000 U.S. growth stage businesses had anticipated to witness repricing, presenting both challenges and opportunities for the industry. This could potentially serve as a necessary market correction. The growth of artificial intelligence and industry forecasts now lean towards recovery by 2025. Around 2,000 U.S. growth stage businesses are preparing for adjustments, indicating significant market shift. Additionally, the expected introduction of the first Bitcoin ETF in January 2024 may boost Bitcoin's market performance, offering new opportunities for startups in this space. The year of high expectations in 2023, 2024 aims for more grounded AI applications, especially in healthcare, finance, and manufacturing. This approach aligns with the need for real-world solutions and environmental considerations. In the innovations of manufacturing is witnessing a tech-driven transformation. Venture capitalists are showing interest in solutions that combine IoT, AI, and edge computing. Notable startups such as ThinkTrax and GrayParrot.ai are leading efforts to improve efficiency and sustainability. And the shift to hard tech. While software has been primary focus for VCs, there's a growing interest in hard tech. This trend is driven by global concerns about climate change and energy needs. European investors like HSBC are emphasizing innovations that address tangible challenges. So we got more going on in digital health data evaluation, fintech's forward march, and emergence of the frugal entrepreneur. I'll read this part right here because I want to stick core to the blockchain specifics. So yeah, the economic challenges of 2023 have given rise to new entrepreneurial mindsets focused on sustainability and profitability. Startups emphasizing cost-effective solutions are anticipated to succeed in this environment. Despite the hurdles of 2023, the crypto and blockchain industries remain steadfast. With regulatory adjustments and the emergence of pragmatic entrepreneurs, the future appears promising for sustainable growth and innovation. So that's that right there. And VC firms plummet in 2023 despite soaring crypto markets, and here's why. In more blockchain sector news, we have blockchain gaming gets 100 million boost from Asian studios. From NFT gaming news, Asian game publishers WeMade from South Korea and Singapore-based Whampoa Digital recently unveiled a jaw-dropping $100 million blockchain gaming fund. WeMade's strategic partnership and substantial funding demonstrate its clear commitment to breaking free from South Korea's stringent anti-blockchain gaming regulations. Both studios are determined to play a pivotal role in accelerating blockchain adoption with a strong emphasis on the burgeoning Middle East region. Powering blockchain games amidst the Korean ban, South Korea's government has persistently opposed blockchain gaming with its borders since early 2021, exemplified by the ban on 5 stars to a play-to-earn NFT game that was deemed to promote financial speculation. Nonetheless, WeMix Play platform plays a pivotal role in showcasing a curated selection of blockchain games, such as its MMORPG Legend of Mirror series with a focus on tokenization. Additionally, the company hosts its very own gaming NFT marketplace. What's more, the gaming developer is also actively in the process of developing the WeMix Play Center, a dedicated commercial space situated within Dubai's DIFC Innovation Hub, serving as a central hub for fostering collaboration and mentorship. This center is specifically designed to cater to blockchain gaming companies and projects that receive grants from the fund, facilitating cross-collaboration among the participants. As both WeMade and Whampoa Digital lead the charge in revolutionizing the future of gaming technology, the introduction of the Web3 Fund to support blockchain gaming represents a landmark movement at the intersection of these two dynamic industries. So this is from Blockchain Gaming gets a $100 million boost from Asian studios. On into crypto news from Forbes. New pig butchering crypto scam includes U.S. victims and overseas. From Jason Brett, senior contributor and former U.S. regulator at FDIC, blockchain and crypto policy expert. On Thursday, December 14th, the Department of Justice DOJ announced an indictment in what is described as the latest cryptocurrency investment scam known as pig butchering to the tune of $80 million. But as Americans are becoming victims as they are duped out of their life savings, it turns out the scammers in the front lines are victims themselves of human trafficking, mainly located on the other side of the globe in Asia. With financial devastation on one hand and the potential growth of modern-day slavery on the other, pig butchering may be one of the more pernicious crypto crimes to date. More broadly than the DOJ's enforcement action, which is not the first regarding pig butchering this year, is the United Kingdom's decision to sanction people in business in Southeast Asia that are connected to the pig butchering scams. According to the Ari Redboard, the global head of policy at TRM Labs, HM Treasury in the UK used sanctions to target traffickers and businesses they hide behind, mostly in Cambodia. The U.S. official announcement this month that included sanctions actions 46 human rights abusers on the 75th anniversary of the Universal Declaration of Human Rights included sanctions which targets 9 individuals and 5 entities for their involvement in trafficking people in Cambodia, Laos, and Myanmar, forcing them to work for online scam farms, which enables large-scale fraud. According to the UK, victims are promised well-paid jobs but are subject to torture or other cruel, inhumane, or degrading treatment. In an interview with Redboard, he explained there are two distinct crimes in pig butchering. One is the individual English-speaking in the US or Europe. The other is human trafficking of the person doing the scamming. HM Treasury UK is going after the traffickers who are forcing them to engage in activity. In the US, the December indictments are not the first, as the DOJ announced a seizure of $112 million related to pig butchering in April and a seizure of $9 million in Tether in November. According to April 2023 press release, frauds involving cryptocurrency have increased at a staggering 183% from 2021 to 2.57 billion in reported losses during 2022. According to Redboard, while cryptocurrency has allowed funds to be moved across the globe faster than in the past, authorities having a lot more success because of track and trace. The $9 million of Tether that the FBI seized was thanks to the transparency of blockchain technology that companies like TRM Labs use to help identify the source and location of criminals. Transnational criminalized organizations are combining confidence scams with technological savvy to swindle Americans out of their hard-earned funds, said Assistant Attorney General Kenneth A. Polite, Jr. of the Justice Department's Criminal Division in April 2023 press release. These particularly vicious frauds where scammers carefully cultivate relationships with their victims over time, have devastated families, and cost individuals their life savings. Now that we have seized this virtual currency, we will seek to swiftly return it to the victims. The DOJ is definitely not the only department focused on this issue. In September 2023, the Financial Crimes Enforcement Network FinCEN, released an alert to financial institutions to sound the alarm about pig butchering, according to FinCEN Acting Director Mauli Das. The anatomy of pig butchering is scam. In the FinCEN describes these pig butchering scams that resemble the practice of fattening a hog before slaughter. Victims invest in supposedly legitimate virtual currency investment opportunities before they are conned out of their money. According to FinCEN, scammers refer to victims as pigs and may leverage fictitious identities, the guise of potential relationships, and elaborate storylines to fatten up the victim before they defraud the victims of their assets, the butchering. The research report from Redboard's firm TRM Labs on pig butchering from 2021 to 2022 indicates links to large transnational organized crime groups. Many appear to be operating in from Southeast Asia, according to TRM research, which is consistent with widespread reports of pig butchering and human trafficking networks based in Laos, Myanmar, Cambodia, and other neighboring countries. FinCEN's alerts notes these scams are largely perpetrated by criminal enterprises based in Southeast Asia who are victims of labor trafficking to conduct conduct outreach to millions of unsuspecting individuals around the world. Let's see. Main points here is basically do a lot of research. And try to meet founders, and especially founders who actually will attend in projects and building startups that will attend actual blockchain, what's called blockchain conventions. NFT NYC, Bitcoin Miami, things like that. Legitimate startups that actually are transparent with their founders at the steerhead of what's being built and are consistent, not like some ghost shell of like a token or something like that, or startup that you don't actually see anyone, or you're talking with people digitally without actually seeing that they're actually doing conventions, doing talks, whether it's uploading YouTube of a talk they've been doing, things like that, and with heavily research that they're not deep fakes. The TRM, do your own due diligence, basically, of research. The TRM report provides further analysis that pig butchering is in fact a series of highly sophisticated operations, often being carried out by interlinked professional and transnational crime syndicates. Thus, those that are victims should understand how sophisticated psychological manipulation is involved, which may be of little comfort but important to understand as this crime wave continues to impact Americans. What options exist for all victims involved? So, obviously, this doesn't have to do with like just blockchain and cryptocurrency. This also can be in the stock market, traditional stock market sector as well, publicly traded companies. The DOJ release does provide encouragement for victims to report when these crimes take place, and are hopeful that public awareness campaign will help get individuals be more on guard against these scams. The DOJ has requested that if you or someone you know is a victim, report it to the ic3.gov. In the report, please reference pig butchering PSA and include as much information as possible in the complaint. Unfortunately, the embarrassment factor involves leads to underreporting. The problem, where some authorities estimate cases actually reported are only 15% of all pig butchering scams that occur. Meanwhile, the UK has fired the first shot in applying sanctions against the individuals and entities involved in the scam farms. That includes victims of human trafficking in the pig butchering equation. As Redboard noted, this pig butchering is a new name for romance scams that have been ongoing for a decade or more. U.S. Treasury sanctioned Nigerian scam artists for romance scam activity long before crypto, but now it appears the transparency of cryptocurrencies on blockchains are allowing law enforcement officials to not only identify the criminals, but start to apply sanctions that pinpoint the problem related to these scams overseas as its source. Again, this is from reporter Jason Brett, senior contributor, former U.S. regulator at FDIC, blockchain and crypto policy expert, and new pig butchering crypto scam includes victims in the U.S. and overseas. Let's keep going here into some crypto news. We've got Yahoo Finance. Hackers stole $2 billion in crypto in 2023, data shows. This is from Lorenzo Franceschi Beachirari, writer reporter for Yahoo Finance. Yet another year, hackers stole billions of dollars in crypto, but for the first time since 2020, the trend is downwards, according to crypto security firms. This year, hackers stole around $2 billion in crypto across dozens of cyber attacks and thefts, according to the D.Fi, the Web3 security firm that runs the REC database. The site ranks the worst ever crypto hacks from the breach of the Rona network in 2022, where hackers stole more than $600 million in crypto, and what stands as the largest incident in history, to the hack against Mixon network this year, which netted the hackers around $200 million. This amount, though dispersed across various incidents, underscores the persistent vulnerabilities and challenges within the DeFi ecosystem. D.Fi wrote in its report, which the firm shared with TechCrunch 2023, stood as a testament to both the ongoing vulnerabilities and the strides made in addressing them. Even as interest in the space was relatively muted by the ongoing bear market in the first half of the year, earlier in December, blockchain intelligence company TRM Labs also released an estimate of the amount of crypto stolen by hackers this year. According to the company, this total as of mid-December stood at about $1.7 billion. Among the worst crypto thefts of the year include the hack against Euler Finance, which hackers stole around almost $200 million, as well as major hacks against Multi-Chain, $126 million, BonkDAO, $120 million, Poloniex, $114 million, and Atomic Wallet, $100 million, among hundreds of others. Last year, the blockchain monitoring firm Chainalysis reported that cybercriminals had stolen an all-time record of around $3.8 billion in crypto. Of those, $1.7 billion were stolen by North Korean government hackers known as the Lazarus Group, one of the most prolific groups of crypto thieves, as part of an effort to fund the regime's sanctioned nuclear weapons program. It isn't a stretch to say that cryptocurrency hacking is a sizable chunk of the nation's economy, Chainalysis said in its report last year. The year before, hackers stole $3.3 billion in 2021, according to Chainalysis. It's impossible to predict what will happen in 2024, but given the poor security implemented by many crypto and Web3 projects and the sheer amount of monetary value they hold, as discussed earlier this year at TechCrunch Disrupt, we can expect hackers to continue targeting the growth industry. So in correction, amended attribution to the REC database in the second paragraph. And there's a YouTube video on this as well if you want to learn more about that. But this is, again, hackers stole $2 billion in crypto in 2023, data shows, from Lorenzo, writer reporter for Yahoo Finance. In Cointelegraph, switch it over to some NFT news here. The NFT recap of 2023. This is from Ezra Vergara, writer reporter for Cointelegraph. What happened in the NFT space this year? So Bitcoin ordinals, the US SEC deeming NFTs as securities, and the issuance of royalties for creators were some of the biggest topics of the industry in 2023. Non-fungible tokens, NFTs, remain an integral part of the Web3 ecosystem in 2023, with many community members continuously braving new avatars and constantly trying to figure out solutions to the space's challenges through this year. While critics regularly write obituaries for NFTs, users trading the asset class prove that the space is very much alive. In the last 30 days alone, the top 10 blockchains used for NFTs have recorded a collective sales volume of over 1.5 billion, showing that there is still demand. While so many things happened within NFT space in 2023, some changes stood out more dramatically than the others. These include historical developments for the industry, like the creation of Bitcoin ordinals, the first United States Securities and Exchange Commission case against NFTs, and the divide regarding creator royalties. The rise of Bitcoin ordinals. Software engineer Casey Rodarmer created Bitcoin ordinals in 2023. Following a blog post on January 21, the developer deployed the program on Bitcoin mainnet. The protocol created Bitcoin's version of NFTs, described as digital artifacts in the Bitcoin network. Traditional NFTs often only hold metadata that points to off-chain storage containing NFTs. This approach has sometimes led to issues such as NFTs showing blank images or even worse. In December 2022, the collapse of crypto exchange FTX affected NFTs hosted on its platform. As the company restructured, the NFT broke apart, displaying blank pages instead of original artworks. On January 4th, a third-party hosting service used by NFT marketplace Magic Eden was compromised. At the time, users reported seeing some images on some graphic images on the NFT thumbnails instead of the NFT's artwork. With Bitcoin ordinals, the asset's contents are stored on the blockchain. While this saves the Bitcoin NFTs from being vulnerable to having their data erased and morphing into blank pages, it doesn't save the platform from people minting unsavory images onto the Bitcoin network. I mean, actually, you know what? It does, because to be honest, like it costs a lot of money energy-wise. So for someone to just go, well, I'm just gonna go, mint something stupid on the Bitcoin blockchain or mint something malicious on there, they're gonna be wasting their money. I mean, like in the tunes of like hundreds to thousands of dollars, because it's no cheap trick to deploy and have people minting, NFT artworks on the Bitcoin chain, and it's so heavily gauged in tooling right now. There's only a few providers doing it, and so again, it's very costly, and so it's not really it's not conducive to attract scammers to encrypt their data forever on the Bitcoin chain because of the cost, compared to using a chain like Solana or some other chain where they can try to scam people. That's my take on it. That's just my opinion. Doesn't mean it doesn't happen, but just my opinion on it. In addition, comparatively to other chains, it doesn't make sense so much. Unless because again, like the person would be stupid, who's trying to scam people. In addition, people arguing that ordinals clog up Bitcoin's block space. The decentralized nature of ordinals allowed a bad actor to inscribe a picture of a man manipulating, himself shortly after its launch. So again, I'm not saying it's not happening, but it's just like someone's really that stupid. They're just wasting their time. So again, the image was taken down from the ordinals almost immediately, but the inscription will forever live on the Bitcoin blockchain as data. So again, you can do what you want. You can, people can spend like absurd amounts of money and put like the worst kind of crap on Bitcoin. It doesn't mean like a marketplace is going to trade it, but it will mean that it is inscribed into the data set of witness nodes of Bitcoin. Yes. Despite the negatives, many still believe that the emergence of a new case for Bitcoin was good for the network. Throughout the year, there were back and forth among Bitcoiners on whether ordinals have a place in the ecosystem. However, it was clear that the protocol's adoption had already taken off. In May, the Bitcoin network overtook Solana in monthly sales volume as a direct result of ordinals transactions. In December, the network took the top spot for most sales in 30 days, bringing in over $744 million, while the Ethereum network garnered $391 million. So Bitcoin is crushing it, yes, where Ethereum was, and we'll have to keep that momentum going. Regulatory issues surrounding NFTs. NFTs also saw the first unregistered securities sales claim in the U.S. regulators in 2023. On August 28th, the SEC charged Los Angeles-based entertainment company Impact Theory for allegedly selling unregistered securities in the form of its NFTs collection founders' keys. According to the SEC, the company encouraged investors to purchase the NFTs as an investment in its business. The SEC alleged that the NFTs were investment contracts, and because of this, they were securities. The regulator's actions imply that the company violated the law by selling the NFTs without registration. The securities regulator also issued a cease and desist order, which the firm agreed to. And after charging Impact Theory, the SEC sued another company for selling NFTs. On September 13th, the SEC charged Stoner Cats, SC2, the creators of Stoner Cats animated series, with conducting unregistered offering of crypto asset securities. As with the first case, the SEC issued a cease and desist order for SC2, and the company acceded. Hollywood actress Mila Kunis spearheaded the Stoner Cats project and collaborated with several NFT creators to make the animated series. The cast in the series included such names as Kunis, Ashton Kutcher, Chris Rock, Gary Vaynerchuk, and Ethereum co-founder Vitalik Buterin. According to the SEC, the company marketed the NFTs as having the potential for secondary sales. The SEC also noted that the ads implied that the credentials of the people involved in the project would cause the NFTs to rise in value. Many disregard the SEC's crackdowns on NFTs. On August 28th, SEC Commissioners Hester Pierce and Mark Oyeda published a dissenting statement against the SEC. The duo argued that the SEC's assertion that the company and purchaser statements cited by the SEC are not the type of promises that form an investment contract. In a Cointelegraph interview, Oscar Franklin Tan, chief legal officer at NFT platform Engine, said that the lack of clear rules would discourage creators from trying Web3 models and lead to the space never discovering the full potential of NFTs. NFT creators lose out on royalties. Earning royalties after releasing NFT collections is one of the best benefits of NFTs for artists and creators, with royalties coded into smart contracts. Original owners earned a percentage of the sales whenever an NFT was sold and resold. However, things changed in 2022 when NFT marketplaces started experimenting with the optional royalties model. Under optional royalties, buyers can choose to set the royalties they want to contribute to an NFT project. With this model, there is always a chance that creators might not receive royalties whether their NFTs are sold or not, or whenever their NFTs are sold. In 2023, the effects on the optional royalty trend starting to be felt within the industry. Research data revealed on March 29th that Web3 creators were losing out on royalties. The data showed that in just two of the leading collections made by NFT company Yuga Labs and Bored Ape Yacht Club Basie and Mutant Ape Yacht Club Macy NFTs, the losses were already around $20 million. While Yuga Labs did not cite the losses in royalties as the reason, the company laid off employees in October as it announced its restructuring effort. The NFT firm will focus on its core goals with a smaller team. Despite some NFT marketplaces going into the optional royalty direction, some took the other direction, doubling down on supporting creators and ensuring that they get paid royalties. NFT firm Rarible launched an Ethereum virtual machine testnet with royalties embedded into its code to cement its commitment to supporting creators. Meanwhile, Rarible is more for like independent one-of-one artistry, kind of like Foundation, like that, where OpenSea, Blur, Magic Eden are more for collections. Meanwhile, OpenSea could argue it's for one-of-one artists as well. Meanwhile, NFT platform Engine launched a mainnet with NFT transfers and royalty enforcement integrated into the blockchain's foundational code. NFT space in 2024. As marketplaces continue to compete for market share in NFTs, the products in the space are set to improve in the next year. After all, competitive market demands greater products and services from its providers. In addition, with new innovations like Bitcoin orders and the US SEC continuing its crackdown on Web3, the NFT space is set for another colorful year in 2024. While there may be ups or downs, as long as NFT users are willing to hodl, the industry is here to stay. That's this right here. NFT Recap 2023, what happened in the NFT space this year, from Ezra Reguera, writer reporter for Cointelegraph. Go over to Decrypt. Some more NFT news piece here. So Minecraft cracked down on crypto and NFTs, but WorldCoin integration is fine, Microsoft says. Despite the game's usually prickling stance on blockchain, WorldCoin's new Minecraft integration gets a pass. So obviously, money talks over there. By Andrew Hayward, writer reporter for Decrypt. So Minecraft, one of the world's most popular games, also has been arguably the biggest to push back against cryptocurrency and NFT integrations. Developer Mojang and publisher Microsoft banned their use even within fan-operated online servers. That's why I was surprised to see WorldCoin announce a Minecraft integration last week. Again, they've got money, it's talking. WorldCoin is also from the creator, this guy of ChatGPT. So yeah. WorldCoin is best known for its orb, a device that scans a person's retinas, and this generates a unique iris code, which is tracked on the project's blockchain and used to generate World ID to show proof of personhood. Participants are also given an airdrop of WLD crypto tokens, key part of the WorldCoin ecosystem. So, this is something I'm not participating in because I'm not going to allow my iris to be scanned into a blockchain and have my, human DNA type aspects of genetic makeup, my eye scan, my iris, and printed on a blockchain just to receive some tokens. Absolutely not. What does this? That's like so far from decentralization, if you ask me. What does this have to do with Minecraft, the blocky sandbox game that became a worldwide sensation? WorldCoin's app integration uses the World ID credential for user verification, letting Minecraft server operators require players to authenticate themselves before being granted certain in-game permissions. I can understand it, but again, It's not decentralization. It's not being able to play a game at free will, which Minecraft still has that. So you don't have to take this option just to play Minecraft. Absolutely not. With the rising prominence, I mean, it might just be an incentive to like earn their token by having your eyeball scanned and your data tracked of your human self. With the rising prominence of bots in online gaming, World ID provides a privacy preserving way to verify humanness. So I was going to say that that's the only other aspect that bots, do plague, hackers plague things with bot type, code bases. So it can wean out bots, yes, to verify humanness and provide players with awareness as to whether they are interacting with other human players or bots. A WorldCoin representative told Decrypt DG, this specific integration with Minecraft aims to help server admins to reduce instances of griefing and keep the game experience safer and more enjoyable for everyone. In 2022, Minecraft announced plans to ban NFTs and eventually did this year, and also banned using cryptocurrencies to reward players, forcing a server that paid out Bitcoin to shut off the feature this past fall. In a statement released in 2022, Microsoft and Mojang described what appeared to be a broad ban on blockchain technologies. To ensure that Minecraft players have a safe and inclusive experience, blockchain technologies are not permitted to be integrated inside our Minecraft client and server applications, nor may they be utilized to create NFTs associated with any in-game content, including worlds, skins, persona items, or other mods. I mean, if you do want to do that, you can go use Sandbox, actually, voxel-based, and upload into Sandbox via their own client creator to create your own assets and sell them on their marketplaces. All right, the final text of the updated Minecraft end-user license agreement, EULA provides more specific guidance outlining play-to-earn features that pay out cryptocurrency to players and banning NFTs that create a sense of exclusivity around items. Basically, we don't want mods that affect players' experience and create scarcity of in-game content based on out-of-game conditions. The EULA states, for example, a mod that directly or indirectly checks if a player owns an NFT to unlock skins, functions, or other in-game experiences is not okay with us. WorldCoin's integration is purely focused on the World ID credential and does not require cryptocurrency or tokens within the game. So it's free and clear. Then, question mark? Reach for comment. Minecraft spokesperson stressed to Decrypt that the companies had no involvement in the WorldCoin initiative and any Minecraft integration should be considered entirely unofficial. Okay. But they added that as long as it adheres to the guidelines spelled out in the EULA in its original post about NFTs, then the WorldCoin integration is likely acceptable. A WorldCoin representative clarified further that the WLD token is distinctive from the World ID credential, and that people in some parts of the world cannot currently access the token. It's important to note that World ID and the token do not have to be used together to be utility with World ID. The WorldCoin representatives told Decrypt, notably individuals in the United States can obtain a World ID but do not have access to the token. That separation between the tech and the token appears to be enough to help WorldCoin skirt Minecraft's rules on other types of blockchain integrations and allow its World ID function to remain in use. That's right there. Minecraft crackdown on crypto and NFTs, but WorldCoin integration is fine, Microsoft says. Does Microsoft directly say that? Sounds a little bit headline-ish. Anyways, on with some tech news. You can do a piece of finance news and close out the stream for the day. This is from Reuters by Stephen Shear. Israel grants Intel $3.2 billion for new $25 billion chip plant. Jerusalem, Israel's government agreed to give Intel a $3.2 billion grant for a new $25 billion chip plant it plans to build in southern Israel. Both sides said on Tuesday, in what is the largest investment ever by a company in Israel. News comes as Israel remains locked in a war with Palestinian militant group Hamas in the wake of October 7th Hamas attacks on Israel. There's also a big show of support by a major U.S. company in a generous offer by Israel's government at a time when Washington has increased pressure on Israel to take further steps to minimize civilian harm in Gaza. Yeah. Shares. Okay, Reuters. Shares of Intel, which has a bit less than 10% of its global workforce in Israel, opened up 2.73% at $49.28 per share on NASDAQ. The expansion plan for its Kiryat site where it has an existing chip plant that is 42 kilometers, 26 miles from Hamas-controlled Gaza, is an important part of Intel's efforts to foster a more resilient global supply chain alongside the company's ongoing and planned manufacturing investments in Europe and the United States, Intel says in a statement. So, I mean, in short, it's not going to really me read. If you are on, again, all these articles are in the description box below. So if you got rooters, you subscribe and you can read the full article. That's it in a nutshell, right? We get it. Tech being invested into Israel for chip production by Intel. I'm a CNBC personal finance reporter. Here's the best money advice I heard this year. This is for the finance before I close out the stream. It's from Annie Nova, writer reporter for CNBC. Key points here. As a personal finance reporter at CNBC, most days of the year, I'm at my desk talking to people about money. And here's some of the advice that stuck with me. As a personal finance reporter at CNBC, most days of the year, they're stuck talking with people about money. Although the general topic stays the same, so many of the conversations are with sources leaving new perspectives. When the idea to do a roundup of some of the most interesting, helpful money insights in 2023, knew right away the points wanted to be brought back. Maybe that's the definition of good advice, guidance you may ignore but can't forget. Here's some of the ideas and recommendations that stuck. When we don't talk about money, we're shielding ourselves from knowing reality. I find people are more private about money than their sex life. Psychoanalyst Orna Guralink, who stars on the Showtime documentary series Couples Therapy, told in May, it can take years of therapy sessions. Guralink said, for people to get around to the subject. I was amazed by that. Money is an unavoidable daily part of our lives, so how could we not talk about it? Even more interesting was how Guralink articulated the dangers of this avoidance. Money is a very important point of the contact with reality. She says people can have all sorts of fantasies and ideas about themselves, but money is feedback from the real world. So when we don't talk about the money, we're shielding ourselves from knowing reality. This really resonated. I've heard friends say that they've gone months without checking their credit card balances. I've noticed how I always underestimate my spending when I draw up a budget. Guralnik pushes people to be more real. You can't take care of yourself if you don't deal with reality. She says we learn from reality, we grow from reality. 2. How to save, how to still have $1 million at 100. Bill Stovall is a stellar example of how keeping expenses in line with income can pay off. At 100, he still has more than $1 million saved. What's more, throughout his career in the steel industry, he said he never had an annual salary beyond $40,000. But each year, he salted away 2% of his income for his old age, and his employer usually matched that. That compounded over the years, Stovall said in the November interview. The only debt he ever took on, he said, was for his mortgage. To this day, he looks for discounts on the grocery store and orders the cheaper dishes on the restaurant menus. He enjoys following the stock market, but almost never buys or sells individual stocks. His life story illustrates the benefits of consistency and frugality, 2 of the most effective financial habits. I always lived within my means, Stovall. I'm not a gambler. Money struggles just aren't you. And number 3. When I interviewed Pulitzer Prize-winning author Matthew Desmond in March about his new book, Poverty by America, we talk about a story from his own childhood. When his father lost his job and the bank took their house, Desmond originally blamed his family for their struggles. When you're in the middle of something, you often grasp at the explanation that is closest to you, which is often about the shame and guilt, Desmond said. When he interviewed people facing evictions for his first book, he said he often believed that it was their fault they were losing their homes. But I think it's the sociologist's job to quote C. Wright Mills, turn a personal problem into a political one, Desmond said. Millions of people are facing this every year. This is not just on you. Desmond's wisdom applies to so much of the financial hardship people endure today in the U.S., whether it's a layoff or food insecurity. Underestimating when your struggle is the product of a larger societal problem helps you to be less hard on yourself and hopefully more compassionate with others. And number 4, tiny financial changes are more powerful. On at the beginning in January, and interviewing financial experts about the money moves people should make at the start of a new year, I told my sources that I didn't believe people could make big changes overnight. And also I asked them were there small things they could do that could still make a difference. And they had a lot of ideas. Rita Asaf, Vice President of Retirement with Fidelity Investments, provided one example. For someone at age 35 who's making $60,000 a year, upping their retirement saving contribution by 1% or less than $12 a week could generate an additional $110,000 by retirement, assuming 7% annual return. More recently, student loan payments restarted. Higher education expert Mark Kantrowitz illustrated the same lesson with paying down debt. If a borrower owed $10,000 and had a 5% interest rate, an additional $50 a month could shave nearly 4 years off a 10-year repayment timeline. Those numbers have stayed with me as a reminder of the power of tiny changes we can work toward. So good luck. All right, so that's that right here. And closing out this stream for the day, I'm a CNBC personal finance reporter. Here's the best money advice I heard this year from Annie Nova, writer reporter for CNBC. And that's all I've got for the day. If, again, you're on the YouTube side, please do subscribe, turn on bell notifications. I have all of these articles in the description box below. Read through and do your own due diligence or research. I will see you all back tomorrow with more blockchain, tech, and finance news. Cheers, ciao, peace be with you. Stay safe, and almost happy New Year.